Hey, this is Amy McGrady, your premier real estateologist, bringing you a video on navigating the Florida homeowners insurance world. It's not easy. Florida's a little tricky. It's a different beast than anywhere else in the country. So listen to this video. I'm talking to you as your premier real estateologist. My background is a 30-year real estate attorney, still licensed, but I've made my shift out of the office and into the streets. And this video is going to be about Florida homeowners insurance, things to look for, pitfalls, things to think about, options that you have. Just remember, in Florida, we don't just hope for the best, we insure for the worst. Now let's go inside. Let's get on the computer because I want to bring you some meat to put on these bones so that you can approach this like a grown-up that you are. All right, let's go inside. Okay, so let's take a deep dive into what you should look for, what your choices are, and how to approach this whole insurance industry in Florida. But before we do that, look at this background. It's pretty cool, huh? Woo, look at that. It's pretty cool. I got the left hand's the dude, the right hand's the girl hand. I don't know. I just liked it. I don't know. I'm having fun with all this stuff, learning all this, because, you know, I ain't no spring chicken, and a lot of this is new to me, and I'm on a little learning curve. But anyway, I digressed again. So let's talk about homeowners insurance in Florida. With the caveat, once again, I am not a licensed insurance agent at all. But I've been living down here. When did I move back? I was born in Miami, raised in New York. I went back to New York. My family's from New York when I was like 11, and then did college up in New Haven and Dutchess County, New York, and now back to Florida, 1986. That's how long I've been living in Florida. So I was born here, but that doesn't really count, except for the fact that I'm going back like a salmon. But anyway, back since 1986, went to law school, practiced law for 30 years, sold the firm, and now here I am, out of the office, into the streets, and still all about real estate. That's why I'm known as the real estateologist. So, as your real estateologist, former attorney, and also former catastrophic adjuster, which I might do those gigs now and then. I accept deployments when I can. But right now I'm selling real estate, so from that perspective, and with all that background, that's why I'm bringing you this video today. So the first thing is that you have to know, if you don't live here, and if you're thinking about moving here to Florida, insurance is a whole different beast down here in Florida. We are not Colorado, we are not California, we are not New York, we're not Texas. We get different things happen here. The first thing being the natural events that Mother Nature bestows upon all of us. You know, California has different things to worry about: earthquakes, fires. That's really their higher risk. Our high risk here in Florida, of course, are hurricanes and some flooding. And I think as the water levels rise, we're going to see more of that. And I think the insurance companies feel the same, which is why premiums are going up on flood insurance and the maps are crazy. But we'll get into that later. Like Texas and the Midwest, their thing is tornadoes. We don't worry about tornadoes. We don't worry about earthquakes here, but we can sometimes worry about fires. We get our share of fires, but nothing like I've seen that California gets. My heart goes out to our California brethren and the surviving that they've had to do there. Anyway, so back to Florida. So there are a couple of factors that affect the insurance premiums and accessibility and options in Florida, and the primary ones are the hurricanes, the risk of flood, the other high wind events like tropical storms, We have an aging housing stock. So that's another thing that insurance companies have to insure against, like those old cast iron plumbing breaks and things like that. And we've also got carriers, insurance carriers that come to Florida and they're like here making money and gone faster than a tourist, baby. So it's another thing you have to be careful of when you're buying insurance in Florida. Make sure that's at least a B plus rated carrier. A plus is better because you don't want to have a catastrophe and then there's no reinsurance. So reinsurance is a whole different industry. And if you're underinsured, there could be nothing left in the money pool when you need money and you need to file a claim on your policy. So there have been real disasters in Florida. But our legislature seems to stay on top of them because a lot of times what they'll do is, I remember back in the 80s, I put in a claim. I didn't know. I was like 20 something years old and I put in a claim for something. Somebody might have stolen my motorcycle or something. So I put in a claim and then I found out, oh, well, that's a separate policy. Our homeowners doesn't cover that. So I said, whatever. And then later when I went to get insurance, they said, oh, you made a claim. I said, made a claim for what? And they said, oh, this claim for the motorcycle. I'm like, that wasn't a claim. You guys told me it wasn't even covered, but it counted against me is the point. So that's another thing to be cognizant of, knowing what your deductible is and knowing whether or not you should even file the claim, I suppose I should say. Look at that crazy hair with that background thing. Anyway, so on a homeowner's policy, let me just start here. We have different coverages basically in Florida. You have coverage A, which is your dwelling coverage. I'm talking single family or commercial. Condos and townhomes are a whole different story. That's a different kind of policy. Turn this volume off the phone. Okay. So you got coverage A, the dwelling portion of the property. So that portion of the insurance policy, which is a contract, by the way, is going to govern how the claim gets handled and how the claim gets paid. The second part is coverage B. Coverage B is other structures. That would come into play when you have like that screened in structure or over your pool. You see that a lot in Florida houses when they have the pool and then they put the screen enclosure around it. That is other structures. Fencing is other structures. She sheds are other structures. Just other structures, something other than the house that's not affixed to the house. That's where you can get into some argument as to how it was affixed and whether it was intended to be permanent, etc. But that's deep. We don't have to go that deep. We just have to know coverage A is the dwelling, coverage B. Coverage C is personal property. You have to figure out how much you want to insure your personal property for. Coverage D is loss of use or alternate living expenses, ALE. Coverage E is your liability portion. Somebody slips and falls on your property, then the insurance company will step up to defend any claims that an invitee or a guest makes. And then I think that's really it, liability. So here's the rub on Florida. Just because you pay one insurance policy, you're not covered necessarily for every peril. So in Florida, for a few years back, we had to have 3 different insurance policies on a house. Now you don't have to unless you have a mortgage. So if you have a mortgage, you're going to have to be fully insured to the satisfaction of your mortgage company. If you don't have a mortgage, you can go bare. You want to take your chances because insurance companies are taking their chances. You're taking their chances with insurance companies too. You're taking your chances that you're going to pay a premium and maybe you might need it and maybe you'll make a claim. So part of that risk assessment, if you don't have a mortgage, is you can go bare is what we call it, which means go without insurance. There was a time when after one of the hurricanes, maybe after Hurricane Wilma, 2005, windstorm insurance was crazy expensive. We had to have a homeowner's policy or the main policy. And then we had to have a separate windstorm policy, and then we had to have a separate flood insurance policy if we were in a flood zone and if our lender required it. So there was a time around then that I had an apartment complex, and just the windstorm policy was $12,000 a year. Just that. And then there was flood, and then there was the fire and the casualty. That one is like necessary in my opinion. First of all, it's not as expensive, and the chances of having a fire or someone slip and fall or someone getting hurt on your property, they're higher than the chances of a hurricane hitting. So all this business you hear about, oh, hurricanes, doesn't happen as much as those other things that we insure against. Slips and falls and people getting hurt and fires, things like that. So don't cheap out on your liability policy. If you don't have a mortgage and you want to cheap out and you want to just take a bigger risk, then you can skip the flood and the windstorm. So back to that story, I used to have this, it was like a 14-unit apartment complex. $12,000 a year they wanted to charge me. I was like, forget it. I didn't have a mortgage. I didn't pay it. Fast forward 10 years, Hurricane Irma was coming. And I went out to the property and I started battening down the hatches, and I was like, survive the storm, baby, because I got no insurance. But the way I looked at it was I had 10 years of not paying $12,000 a year, so I was $120,000 ahead of the game. So if a storm came in and took the roofs off, I could get roofs put on and probably the drywall inside and all those repairs done for less than $120,000. That's the risk. Maybe it would have cost more than $120,000. The good news, I had no damage. So, the universe was looking out over me there. So that's that. And then flood, we'll discuss that a little bit later. But these are the main things. Let me see, what else do I want to talk about? In this next part of the video, I want to go over what your policy does and does not cover. So basically what policies generally cover are fire, theft, windstorm, but you might have to get a separate policy. There were the 3 required policies back in the day, but that's kind of loosened up a little over the past maybe 8 years or so, where you could get a homeowner's policy which did include windstorm coverage. And that's still the case, but now they're kind of moving away from it a little bit because the carriers are getting nervous about their risk exposure. So they're making people buy separate policies, and they're also making it really difficult to get good coverage. And if just notice on any windstorm coverage, the deductible is 9.5 times out of 10 going to be different than your deductible on your general insurance policy. So your general policy against fire, theft, liability, that's whatever you negotiate, anywhere between a $500 deductible and a $5,000 or a $10,000 deductible. You know, the higher the deductible, the lower the premium. The higher the premium, the lower the deductible. So these are business decisions and budgetary decisions that you have to make and discuss with your insurance agent. It's really not a just yes thing. You really need to make these determinations and look at your budget and weigh your risks and your risk tolerance. So let me see. Some water damage will be covered in a policy. For instance, if your pipes break, or if in a condo situation, your guy's upstairs toilet or sink leaks into your unit. These kind of things happen often. But on those water coverage issues and the mold remediation incident to water breaks, they often have policy limits. So again, you want to pay attention to that. I think currently the cast iron clause limits like damage from breakage of cast iron plumbing to like $5,000 and $10,000 cap. That's it. So if it costs you 50 grand to fix that broken pipe, insurance company's only going to give you whatever the policy limit is on that type of a peril. So keep that in mind. You also have depreciation. So back in the day, before Hurricane Andrew, really, that was the first storm that I adjusted. Actually, I had my lawyer hat on. I was representing a client after that storm. But before Hurricane Andrew, every policy was a replacement cost policy. So basically, the insurance company would pay you the cost to replace the damage. Basically, so the replacement costs of the drywall, the labor, all the things that you need to get your house back together, the roof and everything like that. Replacement costs up to policy limits. Now, since Hurricane Andrew, it's been a CV policy, actual cash value. So they're going to depreciate. They're going to say, okay, so your roof was 2 years old. We're going to depreciate it a little bit. Now, if your roof that you need to replace was 30 years old, it's going to be worth nothing. After they depreciate, you're hardly going to get any roof allowance. So watch out for ACV, and it's an actual cost value versus a replacement cost policy. There are, I understand, replacement cost policies coming back into the market. And if that's important to you, talk to your agent about it. Now, what your insurance policies do not cover, especially your homeowner's insurance policy, which could or could not include windstorm, it will not cover flood. And that's where a lot of people just really got hurt because they didn't understand the difference. So it's not going to cover rising water from the ground up. It's not going to cover storm surge. You need flood insurance for that. It's a biggie. So if you're in a coastal area and there was a big storm surge that happened on the west coast of Florida, the last few storms that were big, Ian and I forget the other, Irma. No, Irma was not a west coast storm. The last two, Matthew, I think it was. There were incredible storm surges, and the people that did not have flood insurance got zero on the windstorm coverage because it's excluded. It's a contract. They put exclusions in there, so you have to know what you're buying. Mold. Generally, the insurance policies will not cover for mold unless you build in a rider, but usually, even if you do, it's a pretty small amount, maybe $5,000 worth of coverage or something. It's very limited. Old roofs or neglected property. So now the thing in Florida is, I don't know for how many years now, but now it's like a huge thing. They do a 4-point inspection. Every insurance company does. They make you do it. The agent will tell you, oh, I need a 4-point. If you own a house already, you're probably going to have to get a 4-point pretty soon if you haven't done one recently. And if you're buying a house in Florida, when you get that home inspection done, you might as well order the 4-point. It's going to cost you more, maybe $200 more, maybe $150 more, depending upon the inspection company, but you're going to need it, so just buy it. If you're getting a mortgage and you're not intending to go bare. So the 4-point inspection looks at the roof, the mechanical, the structural, and the plumbing on the house. And it has to be satisfactory. And the better it is, the better your premium will be. A newer roof translates to less of an insurance premium. You're going to use that 4-point inspection with your realtor as a point of negotiation. Because if you're buying a house that's got a roof that the inspector deems to be close to the end of life, which I think in insurance companies, it's 1 to 5 years, depending on the company. If the roof has 1 to 5 years left of life expectancy, you better be prepared to replace that roof really soon, if you're the buyer, in order to either get a lower insurance premium or insurance at all. There are a number of companies that are simply not insuring properties with roofs with an age beyond life expectancy, even if there's nothing wrong with the roof. My house, I had a roof, beautiful flat concrete tile roof. I love that roof. It was actually put on the year the house was built in 1961. I had no leaks, no problems with the roof. And it was pretty, and it's the best roof, I think, in my opinion, to withstand Florida hurricanes because it's flat. There's nothing for it to lift off. But anyway, the roof was good. We took care of it. We, pressure washed it and sealed it twice a year. So did the previous owners. So this roof was like amazing, in terrific shape. But 2 years ago, the insurance company said, we're not going to insure you at all. Your roof is too old, just based on the age of the roof, not the condition. Imagine that. Huh. Glad they don't do that to people. Anyway, so what did I have to do? I had to get a new roof. What kind of business decisions did I make from that? Because I do have a small mortgage. I had to decide, do I want to put on best for Florida flat concrete tile roof to the tune of 70 grand? Or do I want to put on an architectural shingle roof to the tune of $25,000? Well, you know what I did. I picked the shingle. At least I went architectural. Architectural is the same price as 3-tab now, which is kind of cool because I think it looks way better. So allegedly, the roofer's trying to talk me into, well, the flat roofs have a 50-year life expectancy. This one only has 25, the shingles. I said, honey, I'm going to be dead in 50 years, so give me the cheap roof. I just want to get insurance. So that's the story. So structural, they're just looking at structure. Very rarely in South Florida do we see any structural issues on homes. Once in a while, of course, but it's not really a thing. But it's a big thing up by Tampa and up that end of the state because there seem to be a lot of sinkholes up there. We don't really have that many down here in Southeast Florida, but up in the northwest part of the state, there seem to be a lot of sinkholes. So if you're thinking of buying up in the Tampa area or up that way, see what your sinkhole coverage is, because again, I think that the insurance companies mitigate their risk and have a lot of caps and requirements on that sinkhole coverage. So we did the roof on the 4-point, we did structural on the 4-point, electrical, primarily what they're looking for is cloth wiring. That's a big no-no. Not good. So when you're out looking at a house, you want to check, and you want to have your inspector check and see what kind of wiring is in the house. If it's cloth wiring, doesn't mean you don't buy the house. It just means budget to rewire the house and negotiate the hell out of that contract. The other thing that they look for on the electrical side that I see most often is what kind of a breaker box it is. Those old fuses that you screw in, forget it. That's the kiss of death. You're going to have to redo that. And even when you have breaker boxes, you just have to make sure there's no double taps in there. And you have to make sure that it's not a manufactured breaker box or a Federal Pacific. Those are the two down here that I mostly see used. There's like 5 boxes on the insurance naughty list. And the most prevalent in Southeast Florida that I see is Zinn and Federal Pacific. So if you see a Federal Pacific or a box on that property, if you're looking to buy, get ready to negotiate because you're not going to get insurance. It's on the naughty list. And if you're selling a house or thinking of selling a house with a Federal Pacific or any of the other 3, if you want me to research that, hit me up in the comments. I can look at that. I can't remember what they are right now. But if you have any of those breaker boxes on the naughty list and you're thinking about selling, you might as well talk to an electrician and change those boxes out. It's really not hard, as long as you got your Romex in there and you're not dealing with cloth wiring, they'll just change the breakers out and give you a different box. It's maybe a $1,500 to $2,000 job with an electrician. And that's money well spent if you're getting ready to sell your house. And I don't really know if they're safe. Supposedly they're unsafe. That's what the insurance companies say. But I've also heard that it was some sort of a political dispute between the insurance companies and the owners of those breaker box companies. I don't know. All I know is they're no-nos. You can't get insurance with them. So electrical, structural, roof, plumbing. Okay, so thank goodness they don't penalize us for having cast iron plumbing yet. But they're just looking mainly to make sure you don't have that polybutylene piping or something. There was some sort of a plumbing that was used in the 90s and primarily in the Northeast. I don't think we have too many down here with them. And I guess they emitted some sort of a poisonous gas. So the inspectors just check to make sure polybutylene or something to make sure you don't have that. and the plumbing's acceptable, that's not usually an issue. But the roof you got to pay attention to, the electrical you have to pay attention to. Those are the two biggies in South Florida. The others, if they become an issue on the 4-point, you're just going to have to see what they are and deal with them and keep it moving, because for every problem there is a solution. Right, let me see what else. Let's see. So if water comes from the sky, you might be covered. If water comes from the ground, you are not covered, and that means the ocean. That's the ground. So that flood thing, pay attention. And the other thing you have to pay attention to are the hurricane deductibles. You'll have different deductibles in your policy based upon the peril. So for instance, hurricane deductibles these days are running between 2% and 10%. Right? So imagine if your home is insured for $600,000 and you have a 5% hurricane deductible, that means your deductible is $30,000. So if a storm hits and you make a hurricane claim, rightly so, before they can even get to cutting you a check, your damage has to exceed the deductible, $30,000 in that example I just gave. That's a lot. And 10%, $60,000. And people have been shocked when the storms come and they make a claim and they had no idea that their deductible was that high. So very important question to discuss with your agent and to factor into your budget is, what are the hurricane deductibles? If you don't have a mortgage, you might go bare. And that's why I went bare, because it was like $12,000 a year and my deductible was like $80,000 or something. I was like, no thanks. That's like major medical and I'm healthy. So that's the main thing to look out for: hurricane, windstorm insurance, those deductibles. Now, that's the windstorm, but there's another wind event that happens down here sometimes, and it's called tropical storms. But they don't register up on the windstorm policy, so your deductibles will be lower. So I had a client once who had a leak in the roof. They noticed it after Hurricane Irma. But before that, there had been Tropical Storm Gordon, GHI, same year. Well, the public adjuster that helped the homeowner file the claim said, I think that this leak started probably with Tropical Storm Gordon, not Hurricane Irma. The difference on that was that since the damage was done by a tropical storm, the deductible was $500. If it was damaged by the hurricane, the deductible would have been 5% of whatever the policy was, a lot more than $500. Which leads me to public adjusters. They can sometimes be amazing. And if you have a hurricane claim or any kind of claim, a broken pipe, any kind of homeowner insurance claim, I have fantastic, ethical, hardworking public adjusters that can help you. They really can make the difference, instead of you trying to navigate that whole insurance claim thing by yourself. Okay, next I'm going to go into the biggest mistakes that buyers make when they relocate to Florida regarding insurance. Mistake number one is thinking that the market value is the rebuild cost. So often the land is high value, but the rebuild costs the most. So don't overinsure your land and underinsure your building, is what I'm saying. So again, talk to your agent, make sure you're adequately and affordably covered, I guess is the word I'm looking for. And don't ignore the age or the condition of the home or the improvements. Going back to that 4-point inspection. Very important stuff to pay attention to if you're buying a house and if you're selling a house. The buyers are paying attention to this stuff because they need insurance, and to get a mortgage you need insurance, so they're going to come back at you, sellers. So sellers, you might as well be proactive and make sure your 4-point's good. It's not even a bad idea on your listing to share your latest 4-point inspection with anybody that's looking to buy your house. I often put it in my package when I'm selling houses, especially on an older home. Mistake number 3, assuming that your nice little lanai by the beach is covered fully. Nope. Screen enclosures often have limited coverage. That's that appurtenant structure coverage, or big deductibles. So again, you got to pay attention to your coverages A, B, C, D, E, and F. They're all different. They all have different limits and all the things. So again, your insurance agent is your best friend. And if your insurance agent can't answer your questions, find another one, because that's what they do. And they're supposed to know more about that than I do. Mistake number 4, not getting a wind mitt inspection with everything in place. Okay, so that's wind mitigation. So you have various levels of wind mitigation that's done on your house, and those various levels will give you various levels of discount on your premium. For instance, hurricane windows and doors, 100%. If you have 100% all openings hurricane rated with the sticker, you can't just say it. There's a sticker that the inspectors look for on the side. That's your biggest discount. Impact windows and doors. They're not cheap. Price is coming down a little bit, but it's an investment for sure in your house. But it's a fabulous investment because, number 1, you get the insurance discount. And number 2, it's pretty cool to like sit in your living room and watch the storm go by. First time the storm came through and I had my impact windows, I was like amazed, because I'm just so used to like putting up plywood and being in a dark house with all the windows and doors closed up. So it's pretty cool to have them open and watch the storm and see how the birds cope and see how the iguanas cope. And it's quite amazing. So your hurricane impact, and I mean, it has to be 100%. So again, I got away with it for a number of years and I got the discount on my insurance, but I think maybe 2 years ago when they whacked me on the roof, they caught me on the fact that my garage door was not hurricane impact rated. So I lost the discount. The discount was like $3,000 and the cost of a new garage door was $3,000. So I made the business decision to spend $3,000 on the door and continue to get the 3,000 plus discounts going forward. Let me see. Now you'll still get discounts for accordion shutters, just not as big of a discount. You'll still get discounts for these roll down shutters, just not as big. So you see, the less protection you have, the higher your premium, the less discount you're going to have, which means the higher your premium's going to be. So there's a lot of that. Let's see, how to strategize or shop for insurance. That's the next part that I researched for you. So strategy number 1, don't forget this, is shop around. Don't just trust one person, even if it's your auntie, even if it's sister. Just get a couple of estimates, shop around, and then once you love your insurance agent and you pull a trigger, that's it, I love this person, I'm giving this person my business, don't necessarily stick with them every year. Don't necessarily auto-renew. Things change, life changes, people change. Maybe they're not into it as much as they were before. Maybe they're aging and they're semi-retiring and they're not paying attention. Maybe they don't deal with all the underwriters that somebody else might deal with. So the point is, shop it every single year. Do not auto-renew. If you have a good, sharp agent on top of their game, then you're not going to go anywhere. You're going to renew. But you might find someone out there that can do better for you. Strategy 2, bundle your policies, home and auto and all of that. And of course, raise your deductible if you can afford it. Strategy 3, wind mitigation upgrades. That's where you get your savings, your impact windows, your hip roof, your straps, your hurricane strapping. So if you're getting ready to put a new roof on, you might as well ask them while they have the roof off to put the hurricane straps on so that you can show the insurance company you have that additional layer of protection, not just those 6D nails toe-nailed in like the way they used to do it. Actually, like in the 50s and 60s, the roofs were fantastic because they had just come out of a string of hurricanes. So the contractors were really good with strapping. I mean, they overstrapped it. And then there weren't some hurricanes for decades. And then, people said, we'll just throw in a 6-penny nail and toenail it in and it'll hold up. Well, those Hurricane Andrew showed those weren't so great. Those were kind of done in the 80s and 90s. Let's see, maintain your property. Claim-free record. Deferred maintenance will be held against you as well. So just like with my house, one year I got a roof, another year I got a garage door, another year I got, I don't know, different HVAC. Another year we did some electric. When I first moved in, we did electrical work. There's just like always something to do. Welcome to homeownership. The insurance company's going to hold you to it. Let's see. Understand your flood zone and elevation. Hey there. Thanks for clicking in to another episode brought to you by your premier real estateologist. This video is going to talk about Florida homeowners insurance. So before you move here, even if you already live here, let's pay attention to this video because I'm going to talk to you about generally how the insurance industry works down here, what you can look for to save money, what you can do to save money, and what all of your options are. We do have options, but it's an expensive little piece to plug in to your budget, whether you already own a property here or whether you're moving here. But let me just tell you this, before we take a deeper dive, I want to let you know I am not an insurance agent. I have been a Florida real estate attorney for 30 years. I've actually adjusted catastrophic claims for various underwriters in various locations, starting with Hurricane Andrew, going to the fires in California in 2017 up in Sonoma. So I've adjusted claims. I've had that little hat on working for the insurance carriers at catastrophe claims only. And I have represented people trying to get their claims resolved. And I'm a homeowner and a business owner, and I own commercial properties and multifamily properties, all of it. Insurance touches all of it. And there's just different ways that you can pivot and move around and shop for it so that you can do the best you can do. It's just kind of a necessary evil, so to speak, but it can be a blessing if you have it too. So you just have to make sure you got the right policies in place to suit your needs. And just remember, one thing about Florida is we don't just hope for the best, we insure for the worst. So let's go inside so I can get in front of the computer and we can take a deep dive on this. Okay, so now we're back. I got the flood map up. So just a little follow-up to flood insurance. Now, let's clear things up. If you have a homeowner's policy, you're not covered for flood. And that's the water coming up or the ocean coming over you. So there's two sources of flood insurance. The National Flood Insurance Program, that's federal, or private flood insurance carriers. And before you say, but Amy, I'm not in a flood zone. Well, congratulations. Neither were half the people whose homes were flooded in the past decade. So, if you can afford the flood policy, I would say in these times of rising waters and global warming, it's a thing. And it's probably a good idea to against it. I didn't have it for years, but I get it now because I see the change. I live on the water in Florida, and the king tides are crazy. They come up over the dock. They haven't come into the house. We had that 1,000-year flood or something in April of 2023, I think. And, epic 1,000-year flood. And a lot of people got flooded out on that didn't have flood insurance. That it kind of freaked us all out. So we get it now, especially if you're on the water. If you're inland, you might be able to go without it. And if you're in the flood zone X, then that's not a flood zone, according to FEMA, then, your risk is lower that you're going to get flood. Again, everything's back to risk. So if you're anywhere near water in South Florida, just buy the flood policy. It's cheaper than a new kitchen. And just to show you kind of how crazy these maps are, so I just pulled up the FEMA Broward County map, because that's where I am. A lot of the times I also work down here in Dade County. Look at all that water all around us and down into the Keys. But I just focused on Broward for this presentation, just to give you an idea. So you'll just look up Florida flood zone maps. Just look those up and then go to your county. You can drill down and go to your city, your county, and even an address. For instance, like here we go. I can't really tell from this what is going on, but if I zoom in, now I can see. Let's see, let's go over by the water. Let's see what we've got here. Okay, now they're giving us the flood zones if you peek in quick. Zone E, AE. There's even a little zone X over here. Let me see if they give us, here we go. Zone AO, flood insurance rates zone that corresponds to areas of shallow flooding, usually sheet flow on sloping terrain with average depths between 1 and 3 feet. Mandatory flood insurance purchase requirements apply. I don't really see too many AOs in Florida. I see a lot of AE and AH, so let's see what those are. AE, flood insurance rate zone that corresponds with flood depths greater than 3 feet. Mandatory flood insurance purchase requirements apply. Zone AH, flood insurance rate zone correspond to areas of shallow flooding with average depths between 1 and 3 feet. Mandatory. Now if you go down to Zone X, moderate flood hazard area, above the 500-year floodplain, also shown on the firm, blah, blah, blah. Basically, you don't need insurance if you're in a flood X. So, let's see what we've got here. There's a lot of X's here, but all the blue stuff heads up. And there are some X's, but the maps are crazy. It's like you have all this flood, and then this one's not in the flood zone. There was a time when I lived over on the beach. Look at all this. It's not. That's all Zone X. East of Federal. So, well, some of this could be lobbying. It's a pretty affluent area. Interesting. And then, look at this. These guys are over on the beach. There's AE over here for these guys, but then these guys are X. They make no sense. No sense. But even though this is Zone X and you wouldn't be required to carry it, I would carry it because we can get a storm surge right over the Fort Lauderdale barrier island easily. So yeah, there you go. I just did Broward. I think I did Broward County flood map. Speaking of Broward County, a lot of you may not have ever heard of it. It's kind of a weird name. It's named after some general or some soldier or something, Mr. Broward. But there's a movement in place to rename Broward County Fort Lauderdale County or Lauderdale County. That makes sense. I don't care, except for all the money they're going to have to spend to rebrand everything. Oy. So anyway, on that page, though, in all of your counties, whether you go to Palm Beach County, Dade County, Monroe County, it's going to define what the zones are, and you're going to look at that on your flood elevation certificate, which accompanies your survey. So I think we've beat flood to death. Just get it. That's all. And the liability. You're going to have to get it all if you have a mortgage. So now you have to shop and budget and discuss with your insurance agent what you can afford and what risk you can tolerate. Okay, so the power moves to lower your home insurance is 1, get a wind mitigation inspection. That's the 4-point. And that will show the insurance company that you've got those impact doors and windows and hurricane strapped roofs and all that stuff. Bring the house up to current standards, roof, electrical, plumbing, all openings. Basically, insurance companies love updates. Shop yearly, and yes, I mean every single year. I know it's a pain, but it could save you thousands. Imagine that. Bundle smartly, that's auto and home, and if you have commercial properties, bundle. Because your agents will try to give you discounts, bend over backwards, the more things you insure with them. And don't overinsure the land, okay? The dirt does not need insurance. The structure does. Just remember that. Now, the other big thing to pay attention to is if you own a condo, you're going to need a different type of an insurance policy. It's going to be a HO6, not an HO3, homeowner 6 policy. Do not count on the condominium's master policy to cover inside your walls of your unit. Basically, you need to pick that part up and get an HO6 policy, which covers the interior walls, your flooring, your cabinetry, your furniture, all the stuff inside, your appliances, your liability. So none of that's covered on your master policy. So just ignore that master policy. It's there, it's in place, it's required by law, and it will protect on all those common elements. So if somebody slips and falls out by the pool that's not on your property, that master policy is going to cover that slip and fall claim. If somebody slips and falls inside your living room, that master policy is not going to cover that claim. You need an HO6 policy. If a hurricane comes, rips off the roof, or bangs out some windows, and your whole apartment gets like soaked and wet, and you need new drywall, the master policy is only going to go like to the studs. And then all the work inside your unit, walls in, they call it, it's on you. So if you don't have an HO6 policy, it's going to be expensive. And that's a policy that's really not that expensive. I mean, everything's expensive, but that's one that I would pay for and not go bare on, because things can happen. I've seen it. That Hurricane Wilma, that was a beast in Pompano Beach. Took out a lot of ocean condos, and people just didn't know. I was out there adjusting claims, and they were like, yeah, well, I pay my condo fees, and there's a policy. I'm like, yeah, but it's only walls in, so it covered all the air compressors on the roof and things like that, and all the common area stuff, but not the people that had their sliding glass doors bust open and water come in their living room. It wasn't pretty. And if you're not insured, it's even uglier. Let me see what we've got here. So the real risk of underinsuring is basically, some people move to Florida and think that insurance is optional. It's really not. I'd say get that. Even though everything's optional if you don't have a mortgage, and nothing is optional if you do have a mortgage, but some stuff is just like, the risk is too much, man. Don't take it. Even if you own your place free and clear, it's just like, if you have a condo, get an HO6 policy. It's not that expensive. If you're close to the water, get the flooding policy. And on all of your property, get that liability policy. Because people slip and fall, and fires happen all the time. Just saying. And it costs more than the premium to get that stuff fixed. Let's see, so underinsuring is how people really get wiped out. So I wanted to talk to a little bit about a checklist. It might be a little redundant, but hang in with me. 10 wind mitigation upgrades that may lower your policy. Impact-rated windows and doors, hurricane shutters like accordion or roll down, roof-to-wall connections, basically hurricane straps. Number 4, roof deck attachment with 8-penny nails or screws, not 6 pennies, 8 pennies. Basically, if your inspector writes 6D nails, your insurance company basically quietly cries. So upgrade when you're re-roofing and put the straps on and use the 8-penny nails or screws. Number 5, secondary water barrier. It helps keep the roof from leaking even when the shingles lift. Just talk to if you're getting a new roof, or if you're inquiring about a roof, if you're buying a place, you want to know if there's a secondary water barrier. People are not going to know if the roof is old, but if somebody just put on a new roof, they're going to know because they paid for it. The roof shape. So a hip roof is the preferred shape from an insurance company perspective because there's fewer uplift issues. So if you have a hip roof, insurers will love you. Roof condition and age, we already went over that. You know, each different type of roof is going to have a different life expectancy, and you're going to pay premiums based upon the remaining life on that roof. Window and door protection on all openings. Remember, every single opening. If you miss one opening, like the garage, no discount. One window, no discount. Window and door protection, that's another opening. So you could have all impact windows, but you didn't do the doors, you're not going to get the discount. So just do it all. Number 9, garage door wind rating. So they're going to look at the sticker, because your garage door is really the weak link in the house. So rated doors are safer homes and lower premiums. And then number 10, I have the updated electrical, plumbing, and HVAC systems. Air conditioning, heat, ventilation, air conditioning, that's what HVAC means. Inspection notes. When you're shopping for a property, just bring some notes with you. Make some notes, like put the address, the year the house was built, the age of the roof type, whether it's hip, gable, or flat. Are there impact windows installed, impact doors, shutters, garage door? What's the wind mitigation report, the most recent? Can you get a copy? These are kind of the things you'll want to make notes on when you're shopping for houses. And make notes on them when you're thinking about selling your house, because a buyer's going to look for them. And then pro tips, let's see. One unprotected window equals your discount is dead. And if you're re-roofing, spend the extra money to upgrade to clips and hurricane straps. It will pay for itself in the premium discounts. Impact windows and a hip roof, it's basically the insurance holy grail. And get the wind inspection before binding insurance, because it can save you thousands of dollars. It costs you a couple $100, but it can save you thousands. So that's really it. I have this little 10-point checklist drafted. So if you're interested in getting a copy of it, just drop the word insurance in the comments, and I'll send you that free checklist of 10 wind mitigation upgrades that can lower your premiums in South Florida. So while you're in the comments, feel free to ask me any questions that you have. I'll do my best to answer them. If I can't, I'll do my best to refer you to an insurance professional. And please subscribe to my channel. Hit the little bell there so you'll get notifications when I post new videos. And share this video with any friends that you know that might be looking for houses, getting ready to sell their house, or making repairs to their house, or buying insurance to their house. I mean, this touches like on so many things. So insurance touches everything. So if you have anybody that's in this real estate industry, that owns a house, that is buying or selling a house, that lives in a house and pays for insurance, share this video with them. Subscribe to my channel. Hit me up if you have any questions in the comments, by WhatsApp, by text. You can call me. I don't always answer the phone. I keep my ringer on silent a lot, so text and WhatsApp is the best way to get my attention, and I'm happy to jump on a call with you. And that's really it. So thanks for joining me on this very lengthy discussion about insurance in South Florida. I'm Amy McGrady, your real estateologist. No hype, full strategy, and absolutely no sugarcoating. So, see you on the next video. Peace.